Started recording, so let's crack on. Right, VOLA Models. Right, so that's annoying. Okay, so we'll start off with the one on the Discord and then we'll go into training view models. If you don't have access to it already, drop me a message on training view and I'll give you access. There's 4 on training view. We're also incorporating them all into the bot and also onto the site, so you have the lot all available in one place. We'll also enhance them a bit more to just provide signals so you don't have to use as much judgment and it's less subjective. Okay, VOLA models is super simple. You have 3 lines, VVS, VVM, VVH. It's based on our VexVol strat, and
Can you share screen?
oh shit, sorry. Yeah, not showing my screen, but I'm recording. That'd be useful, wouldn't it? Yeah, so if we take a look at queues as an example, right? All right. When did we get a bid today? So if we look at the the queues, the time below is an EST, so it's American time, not UK time. So don't be confused by it. Essentially, when you have a divergence like this on the shorter term, above, like this. So VVS is trending, flatlined here, divergence sort of started here and had a bit of a flat line. Plus, on top of that, you see the same thing happen on the longer term version. That's usually a decent time to go long. So let's flip open and go on to this as an example. So I'm going to load up NQ. You're going to see the similar sort of stuff, except the rules aren't the same. Okay, so we're on the 31st. You can see, let's go to 12 o'clock. This isn't American time, so let's do that. Okay, cool. Now we're at American time. Okay, so flipping back a sec. Actually, we'll just go straight off of this. Alright, so you have all the volas over here. As you can kind of see, there's, let me just get rid of all of these so we can see what we're looking at. So you can see you had a divergence here, right? You had other divergences here as well. So we'll flip to this point first. So it's an easy one to look at.
Still on the Discord, just so you know.
Shit. Sorry. Okay. Alright, here's an example. So, see this?
Yeah.
Okay, cool. So, VOLA models. Divergence on all 4, right? You had it on the MVEX, you had it on the VOLA, you had it on the Z-VOLA, and you had it on the L-VOLA. What's the difference between all 4? Well, the answer's pretty simple. MVEX is focusing on equities, VOLA is focusing on the underlying ticker that you're looking at, so it doesn't matter what it is, it's just focusing on that. You then have the Z-VOLA and you have the L-VOLA. So this is on the shorter term, the 7 minute, I also use it on the 30 as well. Flip between the two, and obviously you don't like necessarily see the same kind of divergence on the 30-minute, but when you get divergence on all four and it's on both time frames, that's usually like when you get the strongest signal. So let's take an example here, right? You had divergence here at around 10:30, both on MVex, VOLA, Z, and L, and we had where is it? That's not a good one. In this case, it didn't like pan out, which is fine. Like that's expected. It's obviously not got 100% hit rate. Usually, like at this point, this is when you would see the greatest like push up. So you would have a move higher. When did they all kind of like flatline? Well, that was basically like a bit further on, because you can see it's still trending up, it's still trending up, still trending up, trending up, until like here where they all basically flatline, which is this point. At this point, you had a bid on NQ. So 12,302 to 12,407, it's 100 points on that 30-minute candle. Now let's flip over to the 7-minute and let's look at the same time point. So it's a bit more granular. You can see things on a more detailed view. So we'll go over here, 7-minute, and this is like where you usually get like a bit more pinpoint accuracy. So you can see over here you have the MVex flatline, VOLA flatline, Z VOLA flatline, L VOLA flatline, and pretty much like as soon as you had the divergence, like a major divergence both on MVex and VOLA, Z and L, we basically had a pretty strong bid. That on a move is 104 points, right? That's how you play it. Usually like what you're looking for is for a bid, this to be the case. So price is moving down, you've got a raised divergence on the VVS versus the other two, VVM being the green and VVM being the red, sorry, and VVH being the green, and then you get a bid. You then also have like additional bid when you get a crossover. So crossover coming here, as we push down on all four, you then got a bid again, right? And literally like lined up kind of perfectly like at that point. Yeah, so another bid again, that was 355, but you're taking the lows to the highs. And then the same happens in reverse as well. So divergence to the downside, right? So let's take this as an example. Divergence here, divergence here. Okay, not so much divergence here, so it's a bit choppy around that point. Divergence here and divergence here. As soon as this kicked in, okay, the divergence like started to like cool down over on this side. When that happened, you then got a pretty big drawdown. We pushed all the way down, and that was around 119 points from that point, right? Starting to make sense? Yeah? Okay.
Is there a good way to know how to when to exit using VOLA?
So yeah, I mean like I typically use like volume profile, so I use that as kind of like a gauge at the same time to see like okay, like where has like price really like started to transact out in terms of like volume, like where is price wanting to be and where is it not wanting to be, type of thing. You can see over here like okay, we had this drawdown. I'm looking at volume profile over here. Basically, like right at this point, you've got like this sort of double distribution in this like value area. And just for context, like I have mine colored in similar like Vexy colors. You basically see the same thing. So we get to like a peak around here, that's like near VWAP, but it's also lining up with like getting to the peak of this volume area, but also like the height of this little range for the day. So if I was to just look at the day's transactions, like you basically have this distribution. As soon as we got to here, like if I'm targeting a short, I'm looking to come from like this point and then try and at least get it down to here, right? So like that distribution was what, 1239, took you down to 12352. And then you want to see, okay, like are we going to accept in this distribution? We did, like you had 12352 and then we actually pushed down straight into 12288. You also then have like the peak gamma positions, so 12322 was also like one area of interest, like from I think maybe a little while ago. I can't remember if it was recently because I haven't been looking at NQ, but that was also like another peak position, I believe, or maybe that was 13322. But I would also use like the peak gamma positions to basically identify like, okay, is this an area that's going to have a high confluence in terms of like resistance or support? So if it's like a peak negative position and we're getting to like a large level, sort of like 200 mil and above, or even 100 mil and above on NQ rather, then I'm like not really trying to carry that short forward. I'd at least like let a decent like chunk of my position like come out, because I mean taking 391 to like 350 is what, 40 points. Do that on like one single NQ contract, you've got around $800 there. Do that on two, you've got 1.6k. So I mean it's just dependent on like how you're sizing those positions. Basically like the highest conviction trades are when you've got all four signaling the same thing.
Hey, Gabriel.
Cool.
Leo at the house.
All right, I'm gonna think someone's like hot micing. So who is hot micing? Might be Junkie, I think, maybe, I don't know. Did that make sense? Like from a VOLA perspective, that is literally it. You're looking for major divergence on the bottom side or above, and then that's how you generate like your buy and your sell. And it's also especially when you get like the flatlining. When you get the flatlining and it's starting to like turn around, that's ideally like when you want to be taking it. Make sense? All right, I'm going to go through a couple of other examples just to like knuckle it down. So let's take a look again, this time on the 30-minute, and I'm going to look at a couple of examples where it's really like paid off. So like here's one example. 30-minute, you had the same thing happen for all four, and you just got an intense bid, right? 1308 down to 13361. Or up to 1360361 rather. Another example here. So in a downturn, pretty aggressive. When did we get bid? When the volas were basically all turned up at the same time, pretty much. Same thing again. When have we also got bid? When it's not happened as like across all four. So here's another example. 15th of August, 9:30, choppy range, extension on both the MVEX and the VOLA. And then you have the same reaction again. 16th of August, 1 o'clock, 12 to 1 o'clock, same thing again. Raised, slightly raised here, start to pull down, but that's 3 in 1. Got another move. That's 13560 to 13740. if I'm looking at volume profile as well to kind of guide me. Right, I'm gonna just try and focus on these 2 days, and yeah, that's gonna work. Okay, so now we've got the volume profile. Looking at just those 2 days. Yeah. Okay, so we're here, looking at volume profile, peak down outside the value area, right? I'd also be looking at this as like an area to really like try and jump in, got the push up, and then get to like the top of the value area, so 13570 to 13684. There's another push up. I've also used this on other time frames as well, and it's provided similar results. VOLA and MVex doing the same thing again. So is VOLA all raised, flatlined, particularly around here, flatlined and risen around here, risen, flatlined, 2 days of bid. Same thing here, flatlined, 5 days of bid. On a move like that, you've got 700-point move. Make sense? And like, just to prove a point, let's just take a stock, so it works on other places as well. So, looking at Tesla now, go down to the 7 minute. Okay, same thing here. Major divergence on the VOLA, so that's relating to Tesla. Huge divergence. Basically, as soon as it started flatlining, marked the dip, and then we just pushed down. Same thing here. On the Z, VOLA didn't have that. MVex did have a bit of a divergence. Major divergence here. This is during pre-market hours. Getting on into regular trading hours here. You had a bit of raise here, and you actually got a bit of a bid. Same thing here. Another point here as well, where you had the Z VOLA doing it and the L VOLA doing it. VOLA itself was slightly raised, got another bid. See the crossover. That was a point of like having protracted drawdown, but that's actually the point where we started to bid. Looking for the reverse, major divergence on L, divergence on Z, not too much going on here though. So the crypto markets and the fixed income markets are saying the same thing. Down we go. That's 281 to 273. It's a case of just like using this systematically. So like, that's basically like what we've built our tools around, providing frameworks, like using data and models to like inform how you trade, not just like taking a trade on the whim.
What's the indicator that is proprietary, the volatility on different time frames? What exactly is it?
So it's not volatility. Like we've got our own spin on like using vol. So we're not using volatility per se itself. We've got our own like formula that we've applied to vol, which is like created like a second order metric, and then that basically is VexVol.
Yeah, so it's basically a proprietary
Yeah.
derivative of volatility or something like that.
Yeah. So for context again, like you can also use this on other things, but like if you're looking to use it, like using all four, like as an example, like CL, right? I wouldn't use MVEX or Z or L, like personally, like if I'm looking at something that's outside of it, like commodities, I'm just using the VOLA, and that's like more relevant for this. So same dip again, draw down, it's a 5% move on the 7-minute candle, right from here. And then in between, like as you've got like raises, bid, raised again, like right here, you started seeing bid again, right? And like once again, like I'm not, there's no indicator that hits 100%, it's just not possible. But like on an expected return basis, if you stick to it, you will have a positive expected return, because like with everything in trading, it's you're just playing the probability. And thus far, like we now have like with continued like data over like the last three-ish months on like a forward-looking basis. So this is no longer back tested. This is forward testing results. You have around 61% hit rate. So if you hit the same size each time for 100 trades, 61% of the time you should hit.
But you have to use a specific stop, right, on your back test so that you be able to do it?
Yeah, so I mean, like it's all variable. Like I mean, for ES and NQ, I've got particular stops for those. Like I typically use like 5 points on ES and 15 points on NQ. For trading on like stocks, it's my own like personal like version. For like when we did our own back tests, like we did the majority of our work on futures, so just ES and NQ using those standard stops.
Great, thanks.
So yeah, CL is an example here. Like the moment this like really perked up, you started to get like a bid, right? And then when the crossover like happened, which is basically like here, there's the bid. And I can't like stress the importance enough of like using volume profile to like aid and assist how you trade. So this is just session volume profile, and then this is like the visible range volume profile. So like here as an example, testing like the session day high of the value area. If I'm seeing like this line up with that, then I'm gonna like try and take the opposite trade here as well. So I can see there's divergence here, it's basically flatlined, and now it's starting to perk up. Get the crossover. As soon as you get that crossover, dip. And this is like super short time frames as well. So yeah, I hope that like helps. I literally just wanted to spend this session just focusing on volas, to make things easier to understand. Yeah, I think that kind of covers everything from the vola perspective. Anyone got any questions at all? Which question? Oh yeah, so to get access to it on TV, all you need to do is, so they're all like looking at so one's like a short term, one's a mid term, and one's a long term. That's basically it. That's pretty much like how we've run it. And all you're looking for really is like VVS like the blue line, on simple terms, all we're looking for is divergence, both to the upside, and if it's up and then flat lines, I'm trying to buy it. If that begins to like cross over and start to pull through both of the VVM, like the green and the red, then I'm looking to like buy again, because that's usually like when you'll get like an intensification of said bid. And then same for reverse, going from low to high, that's when you get sell, and you've seen it like physically. And if you want to go and like take a look yourself, I think that's probably also like one of the best ways to like really see it work. It's just another way of like just building a bit more certainty in like a trade, because I mean a lot of people, like I assume, have been like trading for a while. You've all got your own ways of like trading, like, but then you can use this to kind of aid and assist how you trade, and just adding a bit more certainty. To add it to your trading view, message me on trading view. So just VexLy, VEXXLY. Oh right, yeah. So they're all different in the sense of, okay, so just opening it up. So this is MVEX. MVEX is looking at equities. So like let's just take it as an example, right? Like there's correlations with different asset classes, right? We know that during this bear market, fixed income has had a positive correlation to equities. So that's persisted. You then also have currencies, you have crypto, you also have equities themselves, like as like their own like basket, like implied correlations across asset classes within the equity class. When you combine all of that into like one place, it's quite powerful. So like usually you'll find people, like if they're like a seasoned trader, like on futures, they'll look at a certain currency pair, or they'll look at crypto or something like that to kind of like aid and assist as a signal for a trade, right? So for me, like I was like, okay, I know that this like VOLA model works, cool. Let me try and apply it to various different like assets, and then try and produce the same. So I don't have to look elsewhere. So now I don't need to go and look at different assets to see like how they're performing. I literally just have these 4 models on TradingView, and then that provides like my means of seeing the market in one place, because I mainly trade ES and NQ. So that's how I do it. And that's basically like how like we've built it to help provide people with a means to do that without having to go and look at things individually, because I mean half the time it's difficult to like keep looking between. Yeah. I'll share that up. And MVEX is equities, VOLA is crypto, VOLA is the underlying ticker, and VOLA is fixed income. Hope that makes sense. And then like, okay, just to give, because you say you can't see my mouse, can you see my mouse on TradingView or no?
Yes.
Yeah, okay, fine. So like that should like basically like give examples then. Like here's another one just on CL, like here's for the bid, right? You had a raise on the VOLA. I'm just trading CL here, I'm not looking at anything else. I wouldn't really care for looking at MVAXE or L. When I had like this major like, increase over here, that's where I'm looking for the trade. As it crosses down, you get just a general like drift up. Let's find something else. Let me think.
Hey Vex, I got a question for you, bud. This is Junkie. Sorry about earlier.
Yeah, no worries.
So, are you using the models just mainly as like tools, but still identifying your key levels with your gamma tool to see where everything's concentrated at?
Yeah, 100%. Like I prefer to take trades where like the peak positioning is showing up. So like today as an example, right? 4013 was a peak positive level that basically provided room for sell consistently today, twice in fact. So we rejected it 2 times today before market open. Like here's an example. So 9:30 in the morning, you had about 2 MAE, 2 to 3 MAE on that 4013 level. Rejected. We tried to like get above to it prior to this like pump, just before, rejected. If you took that 4013,
Your tool really shows the momentum of the move waning right there too. If you observe it with that
yeah,
in mind,
yeah,
that's nice.
yeah. And then like this, you had the rejection, and then the volas also perked up at the same time. This is when like the crossover started, so it was a bit early on this one. You just had it on these two. Z vola had like picked up prior to that. You had the move there. So like that gave you that like move as well. Obviously you can use like other things like VWAP, which I also use in conjunction with this stuff to like get my view. But there you go. Like it's just pretty much like a pretty clear example of like how to use it, right? So you like persisted above here, flatlined right at this point, still kind of like packing up, but flatlined here, pretty much flatlined here. You could take a trade there, and then like okay, fine, got another bid. Also, you have point of control at the same point. So there's just all of these like separate things that like taking into account, like you can like structure your trade. But like the peak position here as an example was a peak positive level. It was around 160 mil. Got there 2 points above, literally just flush straight down. Today, like just before that, like drawdown, 3963 popped up as a peak positive level. That had like flushed down a bit, or like obviously drained quite a bit since the cash open, which is like typical of market maker portfolios. We then like went to test that today at the close. 3963 drew down. We hit a low of 3957.25, so that's 6 MAE. But then you got like from low to high, you had 3983 as a peak. The bot also signaled along around 3961, I want to say. And then you had a target of 3974 that hit. You also had like a bit of continuation if you wanted to take it higher. So that's just like an example there of like using the tools in conjunction together. Hope that makes sense.
Yeah, man, that's very good.